is my name, and I'm a professor of international economics here at Sapienza University. And together with Daniele Fano here, we organized this course all together. Actually, this is version 2, and we are the project leaders of this initiative. Now, let me remind you the plan of this webinar, this point. After this brief introduction, I'm going to show a brief video introducing this Macroeconomic Financial Accounts Course 2. After that, we will have the 2 welcome addresses by Antonella Polimeni, rector of Sapienza. Unfortunately, she could not attend live, but we will have a video to show. There is going to be a video message by Professor Polimeni. And then Fabrizio Lapecorella, OECD Deputy Secretary General here, who is already connected here, will give his welcome address. Right after that, Daniele Fano and myself are going to give a short overview of what this course is about, main characteristics of this course, why this course is useful, and what actually we are going to give also a few insights on what we are in the pipeline, following also this course too. Then probably the most important part of this webinar, especially for practitioners here and academicians in some ways, we will have a roundtable that Jorit Zwinenburg from the OECD here will chair, and our speakers will be Henning Arendt from the ECB, from the European Central Bank, then Alfonso Rosolia from the Bank of Italy, Bruno Tissot from the Bank for International Settlements, who will join later since he's traveling right now. And then Peter van de Ven, already here, who's lead editor of the forthcoming SNA, System of National Accounts. Okay, so what is this course about? Let's see a very short video now telling you about the characteristics of this course.
Welcome to Macroeconomic Financial Accounts Course 2. We are excited to have you back if you have taken course number 1, or if you are new, a warm welcome. In this edition, we'll start by sharing the experience of Filippo, a brilliant university student who took course number 1 and had a special role in course 2, as he will tell.
Hi, I'm Filippo Nardoni, a fresh graduate student. Yesterday, I completed my Bachelor in International Economic Relations at Sapienza University. Next year, I will be pursuing a Master in Economic and Econometrics at University of Bologna. Last year, I completed the Macroeconomic Financial Accounts Course 1 on Coursera. As an honor student, I had the chance to work as a junior assistant with special insights from institutions such as European Central Bank, Bank of Italy, Bank of International Settlements, and OECD, and the help of experts such as Giuseppe De Arcangelis and Daniele Fano. This course delves more deeply into sector and world accounts. Whether you have taken course 1 or are just jumping into course 2, you will gain invaluable insights into the complex financial linkages in a market economy. As a junior assistant, I had the chance to broaden my view on real-world economics and also into the theoretical applications of economic models. I believe this course will help you to understand all the mechanisms behind macroeconomic financial accounts, especially focusing on sectors.
Well, this is only part of the video that introduces the course. We decided to cut it and to give the word to the future generations, to the people who are probably going to appreciate even more this class, we hope. I think Filippo really underlined why this course may be interesting, giving insights on why this is useful not only for people who are working in the area for statisticians, but also for the academic research. Now let's move to the more formal part. And as I said, Antonella Polimeni, director of Sapienza, has left a video with us, and let me show this welcome address by Antonella Polimeni.
Distinguished guests, dear colleagues and students, it is a great pleasure to extend my warmest welcome to all of you attending this international webinar, which proceeds the second massive open online course on macroeconomic financial accounts developed by Sapienza University in collaboration with Coursera. I would like to express my sincere thanks to Professor Giuseppe De Arcangelis of our Department of Social Science and Economics for his kind invitation and for his commitment to this important initiative. It is a privilege for Sapienza to continue offering high-level education opportunities on a global scale thanks to such partnerships. A special thanks also goes to Professor Fabrizia La Pecorella, Deputy Secretary General of the OCSE, for accepting to participate in today's event. We are honored to have such distinguished speakers, and their presence highlights the significance of this course and the expertise it brings to the study of macroeconomic financial accounts. The course, as a sequel to the first, provides a more advanced analysis of institutional sectors, including financial corporation, non-financial corporation, households, non-profit institutions, and government. By delving deeply into the financial connections between and within these sectors, participants will gain invaluable insights into market economies and their underlying structures. I am confident that this webinar and the course itself will be a rich source of knowledge and learning, guiding participants through the complexities of macroeconomic financial accounts with the support of major national and international institutions. I wish you all a successful and productive section, and I look forward to seeing the impact of this collaborative effort in the future. Thank you very much.
Okay, this was the rector, and now Fabrizia, the floor is yours. Thank you.
Thank you, Giuseppe, for this kind invitation. It's a real pleasure to be here and have the opportunity to share some reflections on a topic of critical importance. And the relevance of macroeconomic statistics to policymaking simply cannot be overstated, and training that empowers individuals to interpret and utilize this data is crucial to informed decision-making. This course is a key step in ensuring that we build this capacity. We are navigating challenging times. Global dynamics are reshaping our economies and societies in profound ways. Geoeconomic fragmentation threatens trade and global growth. Rapid digitalization transforms how we live and work, and pressing issues like climate change, rising inequalities, and demographic shifts demand urgent attention. In this complex landscape, understanding financial accounts becomes essential for timely, reliable, and comprehensive monitoring of the interconnected financial and economic developments we are witnessing. There is plenty of pressing real-world examples. How has COVID-19 impacted government finances? How has the conflict in the Red Sea disrupted trade and economies? What are the implications of emerging crypto assets for financial markets? How does an aging population affect healthcare and pension sustainability? And what about inflation? How has it impacted different groups of households? These are all pressing issues that sit at the forefront of the OECD's policy agenda. And it is macroeconomic statistics that provide the insights needed to address them effectively. Let me flag here that the OECD has a long history of conducting macroeconomic analysis with statistical information at the core of our work. Our mission is simple: to shape better policies for better lives by developing international standards and evidence-based recommendations to tackle social, economic, and environmental challenges. As a knowledge hub for public policy, we provide the data, analysis, and best practices that countries need to make informed decisions. Macroeconomic information is pivotal to our efforts. We provide users with high-quality information on various aspects of national economies, from GDP and government debt to corporate profitability, financial interconnectedness, and inequality. We also explore the economic impact on the environment, from air emissions to natural resources depletion to the resilience of infrastructure amid climate change. High-quality statistical information on all these topics is essential to come up with evidence-based recommendations and to assist countries in shaping policies that foster economic growth and help them address their most relevant domestic policy issues. And yet, while having high-quality information is crucial, it is equally important for analysts and for policymakers to understand what information is available and how to interpret it correctly. This is often more complex than it appears, given the intricacies surrounding many indicators. Intricacies that reflect the growing complexity of our economy. And for example, GDP is one of the most widely used indicators in macroeconomic statistics, and yet only a small number of people can accurately explain what it measures. And similarly, analysts assessing government debt, sustainability of financial system risk often struggle to find the right indicators. This underscores the need for deeper knowledge of macroeconomic statistics and how key macroeconomic aggregates reflect broader economic realities. The OECD has been working hard to address this need. We've developed international standards and produced handbooks, manual, blog posts, and working papers on key macroeconomic statistical topics that simplify complex concepts and enhance users' understanding of these statistics. This knowledge directly informs key publications such as our economic outlook and our country studies that offer insights into global economic trends based on the proper use of all available macroeconomic statistical information. And we are also contributing to the development of macroeconomic statistics worldwide, helping countries adhere to international standards while improving their data quality and coverage. Our collaboration with institutions like the IMF, Eurostat, the ECB, the World Bank, and the United Nations ensures that these standards remain up to date and evolve to address new statistical challenges and meet emerging users' needs, such as for better insights into the digital economy, non-bank financial intermediation, and well-being and sustainability metrics. To further support users in getting a better understanding of how all these aspects are captured in macroeconomic statistics, the OECD developed two key publications focused on understanding national accounts and understanding financial accounts. These resources provide an overview of the system of macroeconomic statistics and the main indicators. They describe the main sectors with their main characteristic and zoom in on specific macroeconomic trend and phenomenon. The primary aim is to equip users and compilers with relevant insights in the setup and benefits of these macroeconomic accounts. We are extremely pleased to see this publication serve as the foundation for the training course developed by Sapienza University in partnership with Coursera. This initiative will expand the reach of macroeconomic knowledge, ensuring a broader audience can access and effectively utilize this information. This is especially important today as, unfortunately, national accounts have become less central in economics courses. We're also very grateful for the support of the BIS, the ECB, and the Banca d'Italia in making this initiative possible. Their involvement shows broad support for this endeavor and has really contributed to the high quality of the training course. The first course already proved a great success, focusing on the main setup of the accounts and already touching upon several specific issues. We are confident that this second course will build on that success, providing students with more detailed insights into the main sectors of the economy. And I would like to close congratulating colleagues at Sapienza University on their outstanding work in developing this program. I also extend my gratitude to all the colleagues in the scientific committee for their valuable expert contribution. And finally, to all the students participating in the course, I wish you all an enriching and rewarding learning experience. Thank you very much. Giuseppe,
thank you, Fabrizia. Yeah, thank you, Fabrizia. Thanks for the nice introduction that you have given to this second course, to this webinar, and then as a starting point for this second course. Well, you already mentioned the different institutions that participated, but as a leader, as a project leader here, I would like to be more specific on thanking all the different sponsors that made this project available here. So the Bank for International Settlements, the Bank of Italy, the European Central Bank, the OECD, they all contributed financially or in kind to this project. In particular, in this course, we had instructors from the European Central Bank, from the Bank of Italy, who are the real experts on these different topics. But we also had other participants in the podcast that are actually available during the course, developing different topics on this part. Now, last but not least, I really want to mention also the other people that behind the scenes actually helped for this project. So first, Claudio Sardoni here, the professor who was the one of the designers of this project together with Daniele Fano and myself. Chiara Rigoli and the Sapienza Video Center Labs that had they provided excellent video making here. And last but not least here, Anna Margherita, who is behind the label Macrofinac Sapienza here, who's really has been of essential support. I mean, from keeping track of the different versions of the syllabus that we had initially to the uploading the files to the Coursera website. I hope I haven't forgot anyone. I'm sure I did, but and I apologize in advance. So one more housekeeping information. If people wants to ask questions, they can use the questions and answers here, and we'll provide the answers. Actually, Anna probably will provide the answers right away, or otherwise they will have answers in case there are questions that they want to ask, especially for the second part, especially for the webinar. I think this is going to be important. Now, if you, Daniele. So let me say a few words about the course, a little bit more than what Filippo said in the short video. Now, first, the reference for this course is this manual here, Understanding Financial Accounts, which has been produced at the OECD a few years back. It has been the reference also for course 1, but we could really say that for course 2 has become the essential reference, because the structure of this manual is based on institutional sectors, which are the main topics of the different lectures, of the different weeks, the different modules of these class. Just to show you, well, this is the syllabus, and that details all the 6 weeks, all the 6 modules, where, as you can see here, besides the first week, which is a sort of introductory week, and the last week, which is actually on the rest of the world and the relationship of the rest of the world with the different sectors, the 4 central weeks are actually dedicated completely on financial corporations, households, non-financial corporations, and the government, which are the typical institutional sector that we just mentioned. Now, as you have seen, the course is structured as a typical Coursera massive open online course. It's supposed to be taken into 6 weeks, and the course, let me anticipate, is going to be live on Coursera starting next Monday, so September 30th at 8 a.m. Central Eastern Time. Now, this is about the course, this course, as the 2 introductions underlined by the rector and by the OECD Deputy Secretary General. This is a second course, because we had a course number 1, which was a real introduction on this. Then on this course number 2, we are diving into the institutional sectors in details, but we have in the pipeline also a third course. We are in the scientific committee discussing all the different characteristics and what can be the structure of a third course on macroeconomic financial accounts. And let me anticipate that this is going to cross over institutional sectors and international initiatives that are currently ongoing in the international community, like the data gap initiative and the reform of the system of national accounts. Peter van de Ven will, and certainly he will have something to say about that. Now, this is important because some of the topics that Fabrizia mentioned here, the environment, but especially income and wealth distribution, or say the relationship between international financial and non-financial corporations, so the role of multinationals is going to be a topic of the revision of some of the statistics, and I would say completion of these statistics. I'm sure that in the following roundtable, this is going to be discussed. So this is just a glimpse of what can be the next course, but I hope that people will join also this one and will give certainly a very good knowledge of what's going on so far. Well, let me leave the word to Daniele, who was the co-leader with me in this project. Daniele,
Oh,
please. Daniele, I think you're muted.
Yes, thank you very much, Giuseppe. As you mentioned, and Fabrizio Pecoraro also mentioned, the OECD handbook, Understanding Financial Accounts, and I had the honor of co-editing it with Peter van der Ven. And it is really the backbone of this course, but also the backbone of both is sectors. And so we may want to ask the radical question, does it make sense in 2024 to have a course on sectors? Are sectors useful and meaningful? Do they provide relevant information for research and for policy? And as some of you anticipated, the answer is yes. And in fact, I would like to tell you it is a double yes. Yes, number one, in our world with plenty of information, some of which with doubtful quality, macro sectors are very solidly grounded. Institutional sectors group units on the basis of their principal functions, behavior, and objective. Take, for example, households, which are an institutional unit. And they consist of one individual or groups of individuals, and all physical persons in the economy must belong to one and only one household. So this is logical, inescapable, and the basis for complete and sound accounting. But there is a yes number two. In a world of increasing complexity, and also Fabrizio Pecoraro referred to this issue of dealing with complexity, institutional sectors are not constraining cages, as some people may fear, but rather they are the basis for more in-depth analysis. Within national accounts, you can highlight subsectors or construct meta-sectors you believe are appropriate. Let's take again household. So, though the principal function of households are to supply labor and to undertake final consumptions, there may be also entrepreneurial activities of households consisting of unincorporated enterprises. This subset of household is well identified in national accounts. And if you wish, you can construct the broader meta sector of enterprises, including in them the non-incorporated ones. So the logic does not ignore the details, nor exceptions, but it helps identifying, highlighting them, and using them for reasoning and for models. This double yes on sectors rely on the continuous professional work of economic statisticians, persons whose work will never be praised enough. Economic statisticians are very demanding and very careful about soundness, quality, and consistency of the sources. They are also necessarily open to the complexity of the real world and its changes. They design the way data are collected and in which consistency and accuracy must be assured. At the same time, when innovations occur, say, for example, in the way non-financial enterprises create their own financial units, economic statisticians have their eyes and minds open. The successive editions of the system of national accounts, and Giuseppe mentioned course 3, and in course 3 we will also address the new SNA, which are forthcoming. And these successive waves continually incorporate changes that reflect our changing world. And these changes are subject to very thorough evaluation. So dive confidently in course 2 of macroeconomic accounts. You will acquire powerful insights and instruments for addressing complex current complexities and our evolving environment. Thank you very much.
Thank you, Daniele. You mentioned the importance of economic statisticians. Here we have a good sample. And it's about time to give them the word. So, Jorit, please take the floor. And well, we are all willing to hear what you have to say on these, the development of the macroeconomic financial accounts.
Thank you very much, Giuseppe, for the introduction. And thank you very much for inviting me to chair this roundtable. We have four very distinguished speakers. You already introduced them briefly. So we have Henning Annert from the ECB. We have Alfonso Rossolia from the Banca d'Italia. I think we also have Bruno Tissot, but I think he's having some trouble entering the meeting room. So you may want to see in the meantime if you can allow him in. And we have Peter van der Ven, lead editor of the new 2025 SNA, and also one of the lead editors of the publication Understanding Financial Accounts. So in this roundtable, we will have two rounds of questions. The first round is focusing on the relevance of macroeconomic financial statistics for various policy purposes. And in the second round, some questions on the new developments in the area of financial accounts. Given the time, we allow each speaker around 3 minutes to respond to the questions. So hopefully my questions are not going to be too challenging and it's feasible within 3 minutes. With that, I would like to start with Henning. We already heard quite a bit of possible uses of financial accounts data. Can you explain the relevance of financial accounts for the work of the ECB in particular? So what is the key relevance for the main users within the ECB?
Yes, good afternoon to everybody, and thank you very much, Jorit, for the questions, and thank you, Giuseppe, and colleagues from the Sapienza University for the kind invitation. So the relevance of the financial accounts, let me, in these few minutes, focus on a few points. Of course, central banks use a rich, broad set of different statistics. Financial accounts are one of them. Why are they so relevant? I would say, apart from super granular, detailed data on some aspects, central banks need data which cover the entire economy and which cover both the non-financial and the financial dimension of the entire economy, and statistics which are not leaving gaps or alike in the accounts. And central banks need statistics which are integrated. I will perhaps also, because not everybody is perhaps so deep now in the topic, say later a few words more about why this, what we call integration, is so useful. The financial accounts are the, let's say, the high level of the economy, the high level statistical representation. But they have developed over time, and we can in several areas already drill down quite a bit in the financial accounts. Users would like perhaps sometimes to have more feasibility to drill down, but we can already drill down. But maybe most important for the users, and I would say that's the big advantage for central banks, they are in a framework that is also the framework that the economists are using. It's all the tasks of central banks, like, well, economic analysis, forecasting, is basically a framework that is oriented towards the national accounts. And that's where the financial accounts are embedded. So this framework has the financial, the non-financial accounts. It gives us information on production, on income, on saving, on financial investment, on debt. So all that is covered. And it gives us in this framework, and that's why I used the term integrated before, results which fit together. So you could have from different other statistics, of course, information on all the items that I mentioned, consumption, income, financial investment. But you may see that when you look at independent statistics, what should ideally be there, that everything fits together, is not given by nature, is not given by construction already. So you need one system, and this is the national accounts, which makes it consistent. In practice, let's say you come up with a high estimate for household saving. Households save a lot, a high saving ratio. This must imply that these savings either lead to high non-financial investment they lead to high financial investment or to a reduction of debt. And so these causalities are embedded in the accounts, and that's why they are so useful, and that's what we call integration. So we have that in the financial accounts, and that's why our users are using that as framework together with the non-financial accounts for forecasting, for example, to analyze topics like net lending of the economy or of sectors. I mentioned household saving or financing. In addition, the accounts give, let's say, fulfill other criteria. When they are quarterly, that's a good frequency. They need to be timely. They are in Europe relatively timely. After 3 months, they are available. We have long time series, and very important, they are comparable across countries in Europe, but maybe even beyond Europe with the United States, etc. So having said all that, this is the reason why it's important for central banks. This is also the reason why one of the reasons why we very much welcome the course. It was said before, we often state that training on official statistics is not so well presented at universities, and we very much welcome that this is here one effort in this direction. Thanks, Jorrit.
Thank you very much, Henning. Very clear response and very clear the main usefulness of this data. I would now like to move to Alfonso. Henning already referred to the fact that there is a wealth of statistics out there. So from your perspective and from the perspective of the Banca d'Italia, what is the main value added of these macroeconomic financial accounts? You are muted, Alfonso.
Yeah. Okay, you can hear me. Okay, great. So thanks again for the opportunity, Jorrit, Giuseppe, Daniele, of being here and attending the launch of this interesting course to which we contributed. So the question is, what's the relative value added of financial accounts with respect to other statistics that are out there? I guess Henning already gave us some elements to answer this question. Let me just recap them briefly, and then I'll give you my view on the relative importance of financial accounts as opposed to other sources. So Henning told us that basically the financial accounts within the system of national accounts give an organic and structured view of the linkages, financial linkages across sectors, direct and indirect. Let's remember that we have all these look-through statistics that allow us to understand how the financial system conveys funds from certain sectors to other sectors indirectly. So perhaps more importantly, because they speak the same language of national accounts, of economic national accounts, they give an integrated view of real and financial sides of the economy. And this is also important in terms of value. So they allow to address questions like financial instability, monitor debt sustainability, monetary policy transmission, and a lot of other stuff, having an integrated view of the economy and having in mind the whole economy. So in a sense, it's just like those great paintings of, panoramic, so that you can have the big view of the picture and you have grasp of all the interconnections among the elements. But when you get closer, you see that the Baroque decorations on a building are just small spots of paint. It's nothing really substantial. So that's where I think finer data come in handy. Of course, the fact that you cannot really see the details, many details in the financial accounts, does not mean that the painting is not beautiful, that the financial accounts are not useful. Of course they are. But the painting may not be useful to understand the full details, and you want to go to other sources, to finer sources. So that's what you do when you use bank balance sheets, security holding statistics, and the like. I guess the important point, though, is that still, even if with these additional sources, which as Henning was saying, are not really consistent, not necessarily consistent with the broad national account systems and definitions, you can learn something very specific. Still, the financial accounts, the national accounts in general, allow you to put this evidence in context. Going back to the painting metaphor, you learn a lot if you use a specialized source about the decorations, the Baroque decorations, but it is the big painting, it's the financial accounts that allow you to tell whether those decorations are in context or out of context, whether they have to signal something to be worried about, because all the other buildings are rationalistic, or they really fit with the bigger picture. So they provide a big picture, and we are interested in the big picture. So that's the value added. but they also represent a map to which additional details that you can collect from other sources have to fit in. So it's sort of also a reality check of what you can find from other sources. So I think this is the value added of financial accounts. And I guess the answer to your question is it depends on the question you want to ask. Final questions, specific questions require detailed sources, and like more general questions require a broader view of the economy in that sense. Given that that understanding the whole economy is the whole point of economists, of policymakers in general, it's good to have additional sources, but it's also good to have a coherent framework of statistics, the national accounts and financial accounts, that allow you to read, like to contrast the evidence you can derive from other sources with what those that map basically suggests you things should go. So I guess, you know, that the course we are presenting today is a great opportunity to basically develop a map for policymakers, for statisticians, to basically read the economy. And in that sense, I guess it's relevant not only for would-be statisticians, economic statisticians, but also for economists, for macroeconomists, and for policymakers. It's a crucial ingredient that, as many have said before me, is typically overlooked in formal training. So really, I mean, as Daniele said, I really invite people to attend the course and try to make the best out of it. Thank you.
Thank you very much, Alfonso, for these reflections. And I very much like the analogy of looking upon the national accounts as a beautiful painting. So thank you very much for that. I see that Bruno has joined us. So welcome, Bruno. Good to see you. I don't know if I can already toss you into the panel round. We have just been learning from Henning and from Alfonso the main usefulness of financial accounts for various policy purposes. My question to you would be, how do you see the main relevance to have international standards like the SNA to guide countries in compiling these results, and why not just tuning statistics to the national characteristics, because every financial system might be different across countries. So where do you see the relevance of these international standards?
Okay, so sorry to join a little bit late. So I would like to thank you, and I would like also to thank the university for this wonderful initiative. So I am representing the BIS, and at the BIS we see that a lot of central banks are very, very interested in this course on financial accounts. So it's a great project, and I would like to congratulate all of you, and in particular those that have been leading the work. So your point on methodology is well taken. So I would say the obvious: we need to have sound methodology. And for this, you need to have international knowledge sharing, how to do things. You need to have experts discussing together, agreeing on the methods that have to be followed. And of course, it has to be international, but this is obvious. The second thing is the comparability. It's very important to have comparable data, because we know, especially on the financial sector, that we live in a global world, and the global financial system is a cross-border. So we really need to move from one economy to another economy, and you need to have the same ways to measure and to capture things. And in fact, your question on whether looks sensible. Whether we should simply stick to the national economy and address the national economy, and perhaps not try to use international standards that sometimes look complicated. But in fact, the issue is that then you would not be able to raise the right questions. So you will be focusing on your domestic economy, and you would not think, oh, I need to also to address this issue or to identify this problem, because you would be focusing on your economy. So you may be, in fact, not focusing enough on things that you are not may not be relevant for your economy, but at the end of the day, they may be relevant if you really try to assess them. So good examples would be sectors. So for example, some countries, they don't have data on hedge funds, for example, but it doesn't mean that the hedge fund sector is not important in their economy. So saying that the hedge fund sector is something to look at is very important. Same thing for financial instruments. You may say, well, for my domestic economy, derivatives are not important, but in fact, they may be important, but you don't know. So this is really to go below the radar screen and to really be able to focus in depth on what's going on in the economy. I think it can help to have international standards that are done globally. So sound methodology, knowledge sharing, because you cannot reinvent the methodology from one economy to another economy, comparability of data across countries, but also a way to better analyze your domestic economy because you have the tools to do that and the questions that have to be posed.
Thank you very much, Bruno. I think it clearly stresses the need for these international standards, and I think that nicely bridges to Peter. Peter, you have been working on the update of the new system of national accounts. What are the main changes in the area of financial accounts that will be captured in these new standards?
Yeah, thank you, Jorrit, and thanks for the invitation as well. Well, the importance of international standards has already been mentioned, and I should add by way of introduction that the current standards are the SNA, the System of National Accounts 2008, but obviously we need to update these standards every 15 to 20 years. That's the normal procedure. And in view of new developments, etc. So things develop, and that needs to be taken into account. And we are now working on an update that will be the 2025 System of National Accounts, and hopefully, well, expectedly, I should say, that will be endorsed in March 2025 by the UN Statistical Commission. Unfortunately, the length of the document keeps growing. The SNA 2008 is almost 700 pages. I wonder whether we manage to keep under the 1,000 pages, but let's see how it works out. Coming to the changes between 2025 and the 2008 SNA, I could answer it completely different ways. I could say not much changed in financial accounts. And because the basics of financial accounts and financial balance sheets, or balance sheets more generally, hardly changed. There's further clarification, for example, on when to recognize or not recognize pension entitlements. There are clarifications on the recording of things like factoring and margin payments, etc. And there is additional guidance, obviously, on crypto assets. This is really a new feature which didn't exist in 2008. So we need to provide guidance on the recording of crypto assets. But the basics of financial accounts and financial balance sheets stand as they were. However, that's not the whole answer. If you look at the additional details, the supplementary tables which are included, that's a lot when it comes to financial accounts and balance sheets. And I want to mention not all of them because I have only 3 minutes, but I think one of the topics which is covered much better in the 2025 SNA is capturing financial risks and vulnerabilities. And this is not only about compiling from whom to whom tables, so who borrows money from which sector, etc. So data on interconnectedness, it was already mentioned in the introduction. It's also about non-bank financial intermediation, having more details on non-bank financial intermediation. I like the old term, shadow banking, better. But this is something that well, became evident from the global financial crisis in 2008, 2010, that we need more information on this type of financial intermediation. And there is a lot of new standard and supplementary breakdowns of financial derivatives, for example, also in this context of capturing risks, financial risks and vulnerabilities. But there are other topics as well, and I will only mention them without going into detail. I would like to mention distribution of wealth in connection with distribution of income consumption. I think that's incredibly important to have more detailed data on how wealth is being distributed. Sustainable and green finance. So there's additional requests for example, green debt securities or sustainable debt, ESG, they call them ESG related debt securities. That's the second top. The third one is we have now a new chapter on Islamic finance. And then I could also mention more details on capturing provisions and also fintech related activities. I stop here. It's a lot, but I think it's a major improvement when it comes to the standards for financial accounts and balance sheets. Thanks.
Thank you very much, Peter. Yeah, and thank you very much to all the participants. I think this first round of discussion already shows the high importance of financial accounts and the clear relevance of having international standards. I planned a second round of questions. I think I need to probably shorten the time that I allow you to speak. It's having experts in the room is always challenging to keep them within the 3 minutes. I think we still have a few minutes left. I think with some references already to future developments in the financial world and ongoing initiatives mentioned was already made to the G20 Data Gaps Initiative, the update of the standards. I think I would just like to raise one question to you all, and that is for you, for your organization. What is the key change in the coming years in the financial world that we will need to focus on from a statistical perspective? So what is the key element that you think is going to be of relevance in the coming years to capture for us? I think I will do the reverse round. So I will start with Peter and then work my way back to Henning. So Peter, you want to give it a go in 1 minute?
Thanks. I will keep it short because I think it's difficult to make forecasts, especially when it concerns the future. So hard to say what the emerging trends will be. I think that my colleagues will be able to provide a much better answer than I do. But personally, I'm curious about the new developments in the area of digitalization and how that will affect future finance. For the rest, I would like to emphasize the importance of implementation. We can create fantastic standards and ideas, but in the end, it comes to implementation. So I would welcome a certain focus on that as well in the years to come. I stop here. Thanks.
Thanks, Peter. Then turning it to Bruno, your views?
So I think implementation is indeed very important, and that's why it's a success of the Data Gaps Initiative, because you have a mechanism with peer pressure, with reporting of countries to fill the gaps, to implement and to have the data. So very important. I would say that when you look at the Data Gaps Initiative, the last phase number 3, a lot of the recommendations are on climate change, on the impact of climate change. So I would not be surprised that this issue of climate change will occupy us for the next decade, I would say. And in particular, we are working on at the BIS on the climate finance recommendation, and it's quite a lot of work. And to finish, perhaps not on content, but in terms of plumbing, in terms of how to do things, we have this impact of the new data sources. So, and this is part also of this new DGI. We are looking at ways to enhance data sharing and also access to new types of data, new sources, new data providers, and how this can influence the way we do our the compilation exercise.
Perfect. Thank you very much, Bruno. Alfonso, your views?
Yes, I mean, I guess my views are the same views as Peter and Bruno. I think that, given that predicting the future is very, very hard, and we cannot define standards today that, allow us to develop statistics that are able to capture phenomena that will emerge in 10 years from now, I guess we have to set up the machinery that allows to do that, which is not really definitions, but instruments like the willingness to implement, the ability to share knowledge, and the possibility to access the data that from time to time statisticians, economic statisticians, deem relevant to measure specific phenomena. Just to give one example, I mean, there's a lot of attention on cryptos, as Peter remembered us. I mean, fintech, is a broad concept. You have crypto among there, which is, this very, even really weird assets that move around, financial instruments or payment instruments. And the point is that by their nature, there's no way we can, trace these instruments to specific transactions, subjects, and stuff like that. So the question is how it's going to be very, very hard even to get the data to measure the phenomenon. And we have to be ready to have the instruments, the normative, the regulatory, and the technical instruments to access sources like, the blockchain and extract data that we need for compilation of statistics from there. So I guess, the crucial thing is we don't know the future. We have to be able to, we have to set up a machinery that allows us to deal with it. And I close it here. Thank you.
Thank you very much, Alfonso, for these reflections. And then finally, Henning, your views?
I agree to all what was said, but maybe I can add one point that is not really new, but it's still the topic of globalization, perhaps connected with the topic of financial integration in Europe in particular, where this process is very far advanced, where the relevance of national data, national accounts concepts for individual countries or for smaller countries, which are financial centers, create a lot of challenges and issues for the economic statistics, and where we really have to work hard to provide the tool set for analysts to properly monitor what is ongoing. Thanks.
Thank you very much. Thank you very much, Henning. I think, clearly shows that there is a lot of dynamics going on, and it's difficult to foresee what is going to happen in the future, but there will still be issues that we will have to look into, providing our users with relevant information. So thank you very much for your contributions to this roundtable. I think it clearly shows the relevance of financial statistics and also the relevance of this training course. And I think in view of future trends, I think people can also look forward to course 3 in that sense. So thank you very much. And I'm now turning it back to Giuseppe. Thank you very much.
Yes, thank you. Thank you, Jarek. Thank you, everybody. Let me, close here. We are perfectly on time, 4:30 p.m. And Central Eastern Time. Now, let me just make a very last comment. Being an international economist and actually even teaching in the School of Public Policy and Political Science, the first thing that I got in mind, especially when we were discussing all the international standards, is that in a world that is becoming more and more divisive, it looks like that international standards on statistics and the same way of measuring things can be something that cannot be different among different blocks, different countries. So I don't know. I'm pretty confident that probably working on panels in which people from many different countries, they have to decide what is the correct and best measure of different things, can provide a way to get people together in a more and more divisive world. Well, I thank everybody for this. I thank all the participants to this webinar. The webinar is going to be available on our YouTube channel of the Macrofinac. Shortly, we will send to all the participants the URL on which you can access the video. Thanks, everybody. Thank you.